station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great Christmas, Hanukkah. And let's kick it off into the new year, folks. 2015. You're going to love it. This quote is by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials up 2, NASDAQ is flat, S&Ps are up 250, gold contract down $14.40, trading at $1,180 an ounce. Silver off 37 cents at $15.77 an ounce. Platinum down 16 at $1,201 an ounce. Copper flat at $2.83 a pound. Light sweet crude down $1.12 at $53.61 a barrel. Oil, folks, taking its next leg down. You get $50 coming up in the oil market. It's going to be a trip watching this whole oil deal. We're going to bisect and dissect that in the next few minutes. Bond market. 10-year up 10 ticks, trading at 126.10. 30-year up 14 at 143.26. King dollar up 226, trading out at 90.53. King dollar is trying to go after that 2005 high, which is 92.5052 on that continuous contract. Euro is down 30 at 121.53. The yen is up 37 at 120.69. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a flat market out here. We get light volume. On the 26th, folks, that was the lightest day of the year thus far. That's when the S&P went from the 0.84 to 0.92. Right now, you're at 0.91.58. Volume-wise out here, this is a holiday week once again. You're at 335 million right now. We'll probably do about 500 million. Dow Industrials. What do you have with the Dow Industrials? Same setup with the Dow. Dow Industrials sideways move. Been 4 days of a sideways move out here. Light volume, no action. Putting juice into the Dow Industrials today. You had J.P. Morgan Chase. That's up 53 cents. Home Depot is up 79. Boeing is up 93, and Disney is up 64. Taken away from it on the way down, you get Big Blue down $1.99. Microsoft is off 50 cents. You get Procter & Gamble down 90 cents, and you get Intel off 28 cents. We go over to the NASDAQ Composite. Inside the Composite, what we have is this. Flat market in the Composite out here today. The first high that was generated on the 28th of November, that high was 48.10. We come off that high, had volume on the way down a week and a half ago into that December 16th level where the NASDAQ got to 45, 47. And right now, what you're doing is that you're testing the 28th, and we're testing that also with anemic volume. On last Thursday, we did, was it Thursday? Let's see, we're at Monday, right? Yeah, we're at Monday. Last Friday, we did 930 million. The NASDAQ today will do about 1.2 billion. We go back to what it's basically going up against, and you're going up against the 990 million also. The small caps. Now, check this out, because the small caps right now are just really wild, folks. And the small caps basically set up to sell. I suspect, we'll see when the selling will actually take place. But this is what the IWM is doing right now. We hit 121.38 today. The high of July 1st is 120.97, and we are at 120.98. And we're doing that with 21 million shares versus 65 million. This is a sweet little setup. What's also sweet is this, is that, now this is a beautiful technical type of setup. And what it specifically, you know, today they're listening to CNBC, they were talking about that this is a perfect head and shoulders bottom and it wasn't just one analyst, there was quite a few analysts that were talking about this, and that was a beautiful head and shoulders bottom, and they're doing the 2015 speculations of where things are going to be, and plenty of them thought that the small caps were going to basically go to the moon because of this. Bottom line, folks, that's their take, which makes a market, no doubt. My take, what you have is that you have a high volume swing low down at October 15th. That's 103.51. You get the high volume swing low on December 16th at 113.03. That's where we're going. Now, this is, what is absolutely amazing is that how these tests get done when there's absolutely zero volume. And you know, yes, it's a holiday week, all of the above. We'll see how this shakes out into Wednesday. But it looks at this particular case. We had today and tomorrow to actually get real action going in the marketplace. But guess what? Everyone's on vacation. It's not going to happen. That's the way this is set up right now. Gold contract. What do we have with gold? Gold contract's pulling back with lighter volume. Gold contract is building cause for higher price. On November 7th of this year, that's when gold bottomed out, went from 1132 to 1178 with conviction. That move there, we've had 3 separate signs of strength since that move. We're backing down. We're backing down into 132,000 contracts with 74,000. This is, first off, building cause to get to 1256. I expect what you're going to see is actually you're going to see 1347. Oil. Oil contract CLG5. Oil continues lower. It's basically breaking under all the last 7 trading days, 8 trading days. You do have an expansion of volume. We've done 221,000 contracts thus far. It needs like 290 to do a full ABC down. This oil wants to get down into 50 bucks. It's only $3.50 away right now. Now, that's the first one. The second deal is much larger in oil, and this is what it is, folks. If we bring the contract back, and you bring it back to the 2008, because there was a high-volume spike down there at $32.50. Well, the top of that bar is $54.62. We've been talking about it. We came into it today. The way that this is barreling into that bar, however, folks, is saying we are going down to $32.40. That is going to be a total mind blower. Now, what the heck's bringing it down there? Hey, we'll find out. It looks to me like we have lots of oil, and guess what? They got to price it down. That's, you know, this is a different scenario also, just so you can understand this. This is a different scenario as to how it went down in 2007 and 2008. What you had there, 2008 rather, that's when oil went from 147. It took 5 months to get down to 32. The way that this is coming down looks to me like we're going to be down here for quite a while. So it's going to be wild watching this whole tax break shake out as to who the losers are going to be, who the winners are going to be. But there's going to be some corporate losers in a huge way. There's going to be bondholders that are going to be stuck with some big losses out here. King Dollar. Let's go over to King Dollar. So what we have with King Dollar is this. King Dollar is going after its 2005 swing point. If we bring this up, we're going to see on the continuous contract, we've hit 90.60 today, and that swing high up there is 92.53. That's just going to get hit. We're already over the 2008, 9, and 10 swing highs. Now, this is where it's going to get really wild, because if in fact the dollar overtook this 92.50 area, and with conviction, I don't expect that, but if it did, folks, let me tell you something, the dollar will go to the moon. Because then once you're up and over this 92.50, 120 is wide open. And the reason 120 is wide open is that we came down from 120 in 2002 non-stop down to the $88 level. I don't expect that to happen, not yet. I expect the first, it's 100% move or move. You're going to get up there, go back down. And the reason I'm saying that specifically, not just looking at the U.S. dollar, looking at the gold equities as well as the gold contract itself. The gold contract should be, if the dollar was going to stay up at these levels, if it was going to go a lot higher, you'd see that gold contract get smoked. And bottom line, they've tried to push it down on price. They haven't got the juice behind it. They haven't been able to keep the price down. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of some of the Dow stocks, you get American Express up 5 cents. Big Blue's down $1.96. You got Walmart off 20. United Technologies down 26. We got Merck up 33. 3M is up 75. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up $6. You get the NASDAQ up 1. S&Ps are up 3. And, folks, as you are over to TFNN, what you're going to see right on the front page of the carousel, you're going to see we have the open house in the Tiger's Den. Come on over for the month. You can test drive the Tiger's Den for a month absolutely free. The Tiger's Den is state-of-the-art, a trading room, and it's active at about 12, 14 hours a day in there, folks. So come on over and join us. You'll get a lot of great camaraderie, great trading ideas. 877-927-6648. Let's go to the IBB, the Biotech Index. Okay, so Biotech Index right now, NASDAQ Biotech Index is up $1.23. You're trading out at 307.84. And what you have with the biotechs is this, folks. Last week made a high. The high in the biotech index is $319.14. We made that high with 2 million shares. 3 days later, you go from, actually 2 days later, pretty amazing. You go from 319 down to 292. You know, so, you know, nice, what's that, 19, 29, 27 points in 2 days. Okay, 3 days later, you go from 292 back to 307. Now, we're doing 556,000 shares today going against 3.6 million. Bottom line, what you're going to see is that you're going to see, number one, it's going to go after the high volume swing low from the 23rd. And the 23rd, by the way, of December is really a hard day to get high volume going, but this got monster volume going. Why? The door wasn't big enough for these folks that have been in the biotechs to get out. That's the first part. Second part's much larger. The second part is that October 15th is still a swing high volume low out there, as well as July 17th. All three of those have a high volume low. We're at 307. The October 15th swing low is 247, and the July 17th swing low is 242. That's on the daily. That's the target price for the IBB. That's on a daily. On a weekly, it's screaming, and it's screaming a lot lower. So we'll see how this shakes out. It will have to get inside first 268.03. What 268.03 is when we went topside, and we actually made that low the week of October 17th. But what happens there, just so you understand how when you are making high volume lows, it can actually help once you get above those for the bulls as you're coming back down. So what ends up happening there is that you need that type of expansion of volume of 13 million as you get into this 268. When we did come down on the 19th, you did 10 million shares. So, you know, we'll see how that basically tries to come back inside lower price. Gilead, G-I-L-D, was one of the leaders on the way down. Gilead's up 345 today. This is after it gapped down from 109, got down to 85, and the broker-dealer community out there, Morgan Stanley is out there trying to pump this thing up today. Bottom line is that they got it up $3. BIIB, most of these biotechs, this is Biogen's up $1. That's after coming down with 2.6 million. You're at 1 million right now. Let's go to John in Philly. Hey, John, what's going on?
Hey, Tommy. Tommy, this is a really quiet week, but I have to tell you, we did get some fireworks, and I was looking right at it. It was Sunday night. It was 8 o'clock. It's copper. Could you pull that up? I'm wondering, both on the 10-minute and the daily chart. Tommy, copper closed like 281 Friday.
Yeah.
And there was an outstanding low from a week, maybe two ago, at about 278.
Look at that. Interesting.
Well, but if you pull up the 10-minute, it's really cool. At about 8 o'clock, it's thin, of course.
Yeah.
But an order came in to sell like 3,000 contracts.
Look at that.
Ran the stops just under 278, drove it to 275 and change.
Yeah.
And then it rocketed 9 cents in literally an hour. Now, I'm on Tiger TV. I can see it. Thanks for bringing that up.
Yes.
My question, Now that we've gone and broken 277, hooked it, come back up, is there any chance this is a bottom, an important bottom?
Okay, so you have the spike, and, see, this is what's cool, folks, okay? So daily, intraday, as John just said, you got the spike, and you got the spike. That's fast price destruction without volume. And I like seeing that at bottoms, because that's how you normally get a decent bottom in, because what happens fundamentally is that that's someone driving everything down to see how many sell stops are down there. That's what that's all about. And, of course, when the market's illiquid, those sell stops are laying there. Now, as you go back, it was testing the December 1st swing low. That was 98,000 contracts, and today we only did 35. So in that aspect, that has done what it should have done at the lows. Now what would end up happening to look for a bottom, John, you'd be looking for wide price spread accelerated volume on the way up, and then you'd buy the next retracement.
So that's your tactic. Wait for that sign of strength, and then buy the retracement after that. Because
two different things end up happening. What you get first, okay, so first we got the rejection of lower price, and we have lighter volume. Once you get the wide price spread accelerated volume with a sign of strength, you know that you have a buyer in there. Then the next retracement would confirm that, okay, you're pulling back, it has lighter volume, there's less sellers, and your probability of being right goes up pretty dramatically there.
Tommy, I like the sounds of that plan, so very good. I do appreciate it.
Hey, you got to come visit us in Florida, man. Everyone, it's amazing, John, and folks, we have the spring training, the Phillies are down here in Philadelphia, but now what's happening is that now your soccer team's coming down here too, right in Clearwater.
Excellent.
You should see all the people from Philly down here, man. It's amazing. It's really cool too. And we'll see it right now. It starts in a big way. You see all the Philly shirts, man. It's cool. I'll tell you, man. You have some...
I mean, I want to know this. Back when I was a kid, back in the '60s, my parents took the kids spring break time.
Yes.
Down to the Bellevue Biltmore Motel.
That's right. That's right down the street from us.
Is that still there?
They're actually taking it down. It was a wooden. It was the largest wooden structure, in the whole United States.
That was huge.
And the whole United States, beautiful place, but it fell into. They've had about a 10-year battle about taking it down, but it just got. It's getting taken down, and they're going to build I think a bunch of townhouses there. It's going to be nice, but that's right where we are. That's right where the office is. That's right where we live.
Tommy, thanks so much. You have a good
man.
week. Right.
Have a great one, man. Have a safe one. Let's go to Tom in Pittsburgh. Hey, Tom, what's going on? Oh, we don't have him, but he wanted to look at IM Gold, IAG. So IAG is a multi-tier gold company, a mid-tier gold company, rather. The low is 142. The high is 437. And this little baby, so we're backing down today with 6 million shares. It's going into 21 million. These gold stocks are just building cars. This can go to 215. 215 is where that sign of strength was on the 14th of November. 877-927-6648. Give us a call, folks. Don't forget, folks, come test drive the Tigers Den. We got open house right now. Have a great one. You stay right there. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 2. NASDAQ, S&P's are flat. We got Tom from Pittsburgh back. Hey, Tom, how you doing?
Very good. How are you, Tom?
I'm doing great, man.
That's great to hear. Hey, I think you answered my question on IAG. I have a buy-in for 222. There's a sign of strength. Well, excuse me, not a sign of strength, but a swing point. Let me pull up the chart at $2.22 there. But there's another gold stock, RIC Richmont.
Okay.
And I don't think that's in the gold report.
No.
What's your opinion on it?
Okay, let's look at this. This used to be, I kicked it out a while ago, about 7 years ago. But let me look at this thing. So you get Richmond, okay, so in 2008, it was 95 cents. It was up to $13 and then went down to 93 cents. Okay, so you got a couple nice signs of strength in it. It's interesting. Get a high volume swing point. So this is a Canadian gold mine. They own and operate in Ontario and Quebec. Let's see what they're doing right now. So they're taking in 125 million, 24 million per quarter. It's not a, it's a nice setup. It's a nice setup. So if you're going after this one, I'm sorry, go ahead.
Oh, okay. Yeah, I'm looking at two possible points. One is $2.52 on November 17th, but I'm also looking at possibly $2.23 from November 7th.
Yeah, the first one you gave me is really a beauty, man. I mean, if you can get it down there. What you have, folks, is this. At 252, you're going into two separate signs of strength. You know, you're going into the sign of strength when it come off the bottom at $100.40, right? And that's the high of August 11th. And you have 1.2 million shares there. Then what you did, folks, is this. So watch this. You go from 252, about a week later, you're up at 282. Then it does a pullback. So as it pulls back with 360,000 shares versus 1.1 million, which is beautiful. Build some cause, you go topside again, and when you go topside again on November 17th, the low of that is 291, and then the highs, the low is 251, the high is 291. That is what makes it so sweet, because just coming back to the breakout area there with light volume is normally a buy, but then you got the other swing point backing you up there, you know, so.
Okay. So that'd be a good area, 251.
It is a good area. It is a good area, yeah.
And they do produce?
They do produce, and I forget why I kicked it out, but they do produce.
Okay,
and
good.
I think this is a nice setup, man. You put this on a weekly, and I like the setup. I mean, on the weekly, you know, this wants to run to $5.40. That's how it looks. I mean, let me put it on a monthly for. Yeah, it's set up right, man. This thing's set up right.
Okay, yeah, I really think this is the time to get in some of these gold stocks after tax selling gets done by the 31st. I think we're having a nice run here.
You know, my take is that gold is at a low, and one of the largest things, folks, and you might have heard me say this last week, okay, but we had some folks that wanted to buy physical gold. Well, physical gold right now at one of the largest places in the country that I know you can get gold, period, the premiums are like $65. And those premiums, you know, so yeah, we have gold, you know, running at 1183, but the bottom line is they try to buy gold at 1183. Well, you can buy paper gold at 1183, but you're not going to buy real gold. That says quite a bit as to, you know, what's going on inside the gold market. And that means that there's more demand than there is supply. So I like how the equities themselves have been leading the actual physical contract. And the divergence inside all of this is that the dollar is still at a high. You know, so, you know, you can look at gold and say, man, gold should be down $30, $40, $50. I mean, you know, the dollar is powerful, man. I mean, but it looks that, you know, this dollar evidently wants to top out at these levels, which technically would make sense. And, you know, fundamentally, what we may get, what we haven't got in years, folks, is our own Fed or our Treasury Department hammering the dollar, you know. And that very well could have to do with, you know, what's going on in Europe and what's going on with the euro. You know, Draghi, I see the euro's at lows today, 121. And the euro has come straight down from like 138. Their central bank, Draghi, all he does is talk. He talks a game, but he doesn't have a stick. You know, so I suspect that, you know, that's where this whole thing's going to come from. It's going to come from nowhere, meaning out of nowhere. That I think will pull his dollar back. Cooking, man.
All right, thanks.
Have a great New Year, man. Have a safe New Year.
Yeah.
2015, folks. 2015 coming at us. Pretty amazing. No doubt about it. No doubt about it. Let's go over and take KGC. This is Ken Ross. If we look at Ken Ross is trading at 269. This is another gold company. This is a gold company that has a huge amount of business in Russia. Yeah, this thing is in tough shape. This has a high volume swing low at $2. This is not done going down yet. We'll see whether it hangs in at that $2 area, because it looks like it wants to go after 159 again. That's pretty intense. But you know what? It's not intense when you have to depend on good old Putin for your revenue and to get any gold out of the country. The amazing part about it is that folks have, and Ken Ross in general, has taken billions of dollars of risk after the CEO, Bob Buckham, at that point basically pulled out, of Russia. Bottom line is that I don't think the board moved on Buckham. He moved on himself, because he's a good CEO, and he's a banker also. Bottom line is that he was right, they were wrong, and now the amount of money that is going south in Ken Ross is like amazing. It really is. So picture this. This company here, this is where you're going to see just how bizarre this is. They take in $3.5 billion, but yet they can't make any money. How's that? And what that has to do with, folks, has to do with all that business in Russia, and they're not going to get that gold out of Russia. That's when push comes to shove, the mine will be built. There'll be more gold coming, but Putin will figure out how to get it all. 877-927-6648. We go over to the XLE. So you got oil going lower. The XLE, flat market out here today. You're at 80.51. This also is not done on the way down. What you have, this is down off $102. You're at 80.50 right now. And that swing point of 76 to 72 wants to get tested. The XLF, the financials haven't been able to basically hold higher price. They've been hanging up here at a price point of $25. Been up there for about 2 weeks right now. I suspect the financials, and who knows what's going to take themselves, but that also wants to run down to the $23 to the $21 mark. What we will have coming into Wednesday, over the weekend I was thinking that, okay, we could get some action today or tomorrow, but the way the market's trading right now, I just don't see it. I think the market's going to be set up to sell the market Wednesday afternoon. This whole deal, people are way too complacent, meaning that they're not going to sell winners, they're not going to sell losers, they're not going to do anything. They're going to come into 2015 and then decide what they want to do. The beginning of 2015, you can hold on for some real volatility. The volatility is going to be in here in spades. Some of that, more than likely, is going to come from Europe, and some of it's going to come from Asia. Right now, the yen is at 120, and, this yen is going to get a lot weaker. And that's what that's all about, is that, the yen had been in a downtrend for so many years. It was absolutely incredible. We're talking about 357 yen in 1971 and 75 yen in 2011. Bottom line is that, the yen made a bottom. And that bottom took into the bottom. So check this out. We're talking about into the bottom of 41 years. 41 years, the yen was getting stronger. That's insane. Now what are you going to have? Guess what? The yen's going to get weaker. Where at 120, it wants to go to 147, 160. That's the two next. Well, the next. This is going to be a big number. 147 is going to, and then 160. You break 160, man, and it will. Then 251's on the agenda. 877-927-6648. Dow right now is up 7. Nasdaq's up 2.5. S&Ps are up 3. Gold's down 10. Silver's off 33. Bonds, you get the 10-year up 11. 30-year up 16. King Dollar's up 215. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials, NASDAQ, and S&Ps, they're all flat. Volume out here, the NYSE is going to come in around 400 million. That's going to be pretty wild if that's the case. Let's see. What do we got? No, you can get to 450 because we only did 446 on Thursday. On the NASDAQ composite, we're at right now, composites at 1 billion. I suspect we're going to get about 1.3 billion. The small caps, the Russell 2000, the IWM has been testing the July high all day long. And you talk about anemic volume, it's just absolutely incredible. It's going to be wild to see, can they hold the price up here, because it's right at the price. It's actually right above the price right now. The price that we're talking from the July 1st high is 120.97. And we're at 121.06. We're at 24 million versus 65 million. That's a big number. Specifically what I mean, like a big number, is that the correlation that it's going into is huge. It's coming up with dramatically lighter volume. Anything over 30% lighter, folks, is huge. In this particular case, that is like 25, that's like 75% lighter. We go over to the bond market. Okay, so bonds this year also, meaning coming up in 2015, the whole world is convinced that bonds yields are going to go up. Now, that scenario has been going on for the past probably 4 years, that folks think that bond rates are going to go up. The way technically we're set up right now, folks, they're not going to go up. They're going to go down. You know, where the 10-year is trading at 126.11, that looks to me it wants to test 129.28. Big number up there. We go look at the 30-year, which we have with the 30-year. Year is trading out at 143.27, and that wants to go to 146.16, and very well could be a monster ABC up, running up to the 154 mark. Now, the deal about the 30-year is this. That once the 30-year got into the spike from October 15th, it hasn't backed off. The bottom of that spike was 141. The top of it is 146. It just refuses to back off. And that is after it tested its high. And when it did test the high, it had lighter volume, which you would expect. The reason you would expect that is that when a bond moves from 141 to 146, and we did that move within 10 minutes on the 15th of October, that's just blowout volume. So also, it's 100% move for move. So you figure you get up there, you hit it. But what we did is that we still hit it with decent volume. We hit it with 453,000 contracts. We backed down. After that, we backed down, and we're backing down with 300,000 contracts, 360, and then 84,000 contracts last week. We start going higher today with 121,000. That's setting up that bonds want higher price, lower yield. The 10-year right now is yielding 2.2. It's okay. So the technical setup is there. The fundamental setup's even more important in this case. Why? Because it's a black and white deal. It's like, how are our interest rates going to go up if the rates around the world are lower, and we know that it has more risk? There's much more risk right now lending money to Spain or Italy. Spain is paying, and people are lending them money at 1.6% on a 10-year. They're lending to Italy at 1.9. We're at 2.2. That absolutely, on a fundamental basis, folks, makes 0 sense. Why? Because their economies are much smaller. They have much more debt. It's GDP, all of the above. You know, you go to France, and they're getting money at 0.8%. So until the rates go higher in Europe, you're not going to see, my take is, we're not going to see higher rates in the United States. It's a supply and demand deal. That's just what it comes down to. You got sovereign funds, you get pension funds, you get large operators, funds. What are they going to do? They're buying U.S. debt because U.S. debt is paying a higher price. Their odds of getting the money back go up dramatically. The more buyers there are versus the amount of sellers, meaning how many bonds we have, drives the price. What has also happened is this, is that you have the aspect that the economy itself, meaning the European economy versus the U.S. economy, okay, bottom line, is much worse. So it's like, okay, how does this work? Okay? One of our targets saying you're not lending to Spain, you're lending to Spain backed by the European Union. Well, that's great. That's fine. If you know, they can. Now this gets really interesting. Okay, so watch, and that's I believe that's probably a fact. You're backed by the European Union. That European Union is Draghi, and that European Union is the guy and the bureaucracy that has been saying for a year and a half that they have a backup fund. But guess what? There's not been one dime of that backup fund that's out there. Bottom line is that I don't care who it's backed up by, what you have is it's not stronger than the United States. That's what it comes down to. If you know, that's my point. The European Union is absolutely not stronger than the United States. It's not even close. So, you know, rates, folks, are staying down, are going down, and I suspect what you're going to see when we're here next year again, the same type of situation. They're saying in 2016 the rates are going to go up again. You know, rates can only go up if there's more supply than demand. Oh, I know what I was going to say when I lost track. What has also happened is that our deficit is going down, so guess what? We are issuing less bonds, okay? Yeah, it's a total flip around. It's a total flip around. You know, if you actually see and go back and Google like 10 years ago where all the fearmongers were out there, you're going to see that, number one, oil is not peak oil. That is less expensive. You're going to see that our deficit has gone down dramatically versus going up. And that's the track that we're on right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials down 10. NASDAQ, S&Ps are flat. Gold down 11.20. Silver's off 35. The 10-year is up 11 ticks. 30-year is up 19. And King Dollar's up 205. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's kick off 2015, a beauty, folks. This is a quote by Roald Dahl. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We had the Dow finished down 15. NASDAQ was flat. S&Ps are up $3. All of these folks with light volume. We did 536 million today on the NYSE. The lightest volume of the year was last Friday, where we did 446 million for a full day. Bottom line, you're at highs with light volume. NASDAQ. NASDAQ also did 1.2 billion versus 930 million. Light volume right across all the indices. We're going to we'll talk about the small caps in a bit also. Small caps got to the high, small volume, dramatically smaller volume, testing that high, and the IWM actually held the high. So we'll probably test that again tomorrow. Gold contract down $11.20, traded at $1,184. Now this contract has had 3 separate signs of strength from November 7th on the way up. Pullback with lighter volume. That is building cause for higher price. Oil. Oil's down $1.05 today at 53.68. The way oil is trading out here, folks, is that oil wants, first off, that $50 level. That, however, is the small number. The way that oil is set up right now, and this is pretty wild, is that you're coming into, and you've got into the bar of the low from 2008. We get another $1 into that bar, and I suspect that we're going to get down to $32. The top of that bar is $54.62. We made it to $52.90 today. And this is set up to go there. You know, these are like magnets, folks, okay? When you get, and that's a high volume swing low, by the way. When you have that, once you get into that bar, you know, if you're in by $2 and it's a $50 bar, that's not the biggest deal in the world. You get in, we got into it by $2.50 today. You get into it for another $1. You get into it by $3, $3.50. It's going down the other end. Those just spike this thing. Because what the next even number that you have, there's going to be plenty of folks that think that, okay, 50 is the number. That's just how it works. And there'll be sell stops under that number. So oil going a lot lower. Let's go to the gasoline market, which affects all of us. Of course, the oil does too. Gasoline today was down 3.7%. You're trading out at 146. Gasoline's following right along. Gasoline broke down to a much lower level out here today, and this is an ABC structure. Probably, let's see, do we get enough volume? We got 35,000 contracts versus 30. Oh man, this is a trip. This is a close call. So the first low had 34,000. Today we did 35,000, but there's other ones that are close to it, 38,000. So the bottom line, when you have an ABC structure on the way down or the way up, you have to take the most conservative one, which would be the one next to it. So volume-wise, it doesn't have it, but you had a wicked expansion in volume. That, okay, is saying that, whoops, man, you're going to be getting cheap gas out here, folks. This is going to be wild watching this shake out. So right now, we are at $1.46. 206. Yeah, it's $50. That's saying we're going to go to $1.10. Let me bring this up on a continuous contract. $1.10. So if we run down to $1.10 unleaded, what you're going to see at the pump is like about $1.40. $1.35, $1.40. That's pretty incredible. That is absolutely incredible. Yeah, that's how that baby's set up right now. Pretty amazing. Gold. Let's go take a look at the gold contract. So, gold out here today, you had a pullback, has lighter volume, all of the above. Gold set up for a much higher price. Gold right now wants to run to $12.39. We pulled back today with 77,000 contracts. That 77 is coming into like 300. Yeah, 342. If I even use last week's, it's coming into 132. So bottom line is that they can't get the price and the volume going simultaneously. This gold market wants to run to 1256 is the first number, then up to 1347. That's the way this baby is set up right now. Bonds, we were talking about bonds at the end of the last hour. Bonds want higher price. We had the 10-year up 11 ticks today, the 30-year up 19 ticks, and the wild card out here, no doubt, is going to be the U.S. dollar. U.S. dollar right now up 235 ticks. That being said and done, with the dollar, as we were coming into the close out here, you had the dollar climbing higher, folks, and that did not whack gold. In fact, gold went higher, meaning it was down $14. Now it's only down 11. Bottom line is that this dollar index looks like it wants to test the 2005 highs, and that's going to be the end of this move. It was a 7-month move. I expect you're going to get some kind of a pullback, and we'll see whether that pullback comes off the high with volume or just a normal pullback. And in that context, it doesn't have to be a deep pullback. It can be a 0.382 up 5.0 pullback. That would still take 3, 4, 5 months. And what that would do, of course, is give the metals market more breathing room. And I suspect the S&P would be going south because the S&P right now just loves a strong dollar. If we go over to the small caps, we were talking about the small caps. We take a look at the Russell 2000. Russell 2000 out here today, we're at 1218.99. The high is 1213.55. It's over that high. Bottom line, inside the Russell is saying, okay, that high can be tested again of today, which is 1220. If we go to the IWM, and this is how you want to basically, this is an easier way to basically keep track of it. You're at 121.05, and it's 120.97. We did that today with 26 million shares versus 65 million. Now, what we are going to get, you know, I thought we'd get a little of this today, meaning higher volatility, but it's not there. Meaning today, tomorrow, the volume is low, the participation is low, meaning investors, trading desk, all of the above, so that means the complacency is out there. But what we will get is that there, on Wednesday, there'll be some selling and or buying. There'll be volatility. That's the bottom line. And why? Because that's the last trading day of the year. But what you also have is that there is there's a substantial number of hedge funds that are closing this year. Bottom line is that they're closing, number one. Number two, guess what? When you close a hedge fund, you're selling all your positions. One just came across the news just now, and it's a small fund. It's still $1 billion, but the bottom line, as of the last filing, they still had $900 million in stock, and bottom line is that they flat out said that they are closing, and 90% of the money is going to be given back in January. So what you're going to see there is that there are going to be sales. It doesn't mean that they're fire sales. You know, the market's up. So the bottom line is they can be selling. But that, I suspect, is going to be more selling than buying. You know, the market right now is basically set up for the first of the year to basically go south. Because what we do have, you had the IBB lead the baby down last week with volume. Did a beautiful counter trend bounce out here today. The iShares NASDAQ Biotech Index, you know, we went up today with 717,000 shares versus downtown with 3.6 million. That is a sweet little deal, folks, for going south. Gilead, Gilead was up $3.51. That was with 20 million shares versus downtown with 72 million shares. That was Morgan Stanley out there pumping it today, saying they thought the stock. The ironic part about it is it's not that they said that the stock was worth a lot of money. They said Gilead was raised to overweight versus equal weight, and they increased their price target to 104 versus 100. He says the Matthew Harrison says in a note he sees improved risk reward as Gilead shares assumes unrealistic 40% price decline and loss of market share in hepatitis C. Bottom line, you know, we'll see where this shakes out. Gilead, folks, wants to go not only south. You know, this came off a high of 116, has a high volume swing low at $85. This thing's going a lot lower, not at $85 low. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 15. NASDAQ, S&Ps were flat out here. What is interesting, and I want to thank one of the Tigers in the Den for giving me this heads up. You know, when we were just talking about the gold market, folks, the GLD, which trades at 10% of the price of gold, bottom line is that, you know, coming into this close out here, someone was into this in a big way. So the GLD was down $1.16 today. You were going against a low out there from the 22nd. The low of the 22nd is 122.41. But when you do take a look at this, what you're going to see is that right into the close, but I suspect the first order came out at 15.30. At 15.30, you had a small spike from 113.42 to 113.77. Then what you had into that close is that you had 1.1 million coming in. And it's basically, it got over the small swing point of 113.73. So that's going to be intriguing to see just what that spike is. Let me go over to the gold contract. So watch how this works. I'll walk you through this for a second. I just want to see the... Okay, so this is what this can be. And we'll know, actually, we're going to know, let me see, we're going to know pretty soon. We're going to know before we get off, before the next hour, before I get off this air, because what happens is this, is that the GLD, the sponsor of the Street Tracks Trust, okay, has to keep the correlation as to where gold is versus the amount of shares that are in the GLD. And that has to do with the net asset value. That's how this thing shakes out. So right now, you know, the GLD is trading at 113.67, yet the net asset value real time is 113.80, you know, which is only 13 cents off. What does happen is this, is that they keep this correlation tight, and they keep it tight by intraday in the derivative market. Then they go from the derivative market to stay delta neutral, meaning that if it goes up or down, they're pretty close to where they have to be when they actually buy the physical gold or sell the physical gold. Because of the way that we traded out here on the 26th, the 26th we went from 11.75 to 11.99. I expect what that was probably the GLD itself buying shares. Well, no, it wouldn't be the GLD buying shares. They can create shares. Let's see, they create shares and destroy shares. No, that's someone else buying. Okay, so this is what we're still looking for. We'd be looking for inside the GLD, and this comes out normally about 5:30. It's fourth. Oh, okay, so it is. It's when I was doing the second one. This will come out about 5:30, and what it is this: they will say whether they bought or sold physical gold. You know, so we'll know that tomorrow morning. You know, they do it every day, actually, okay, just about every day. And they tell you what they bought and or sold. 877-927-6648. Oh, let's go back to the Gilead. So GILD. GILD has been off the high. Bottom line, the equity got really smoked on the 22nd of December. On the 20th, it had closed at 109. It opened that following Monday at 92. What that was all about is that Express Scripts does not want to pay the type of money for one of their hepatitis C drugs. They made a separate deal with another competitor, and they're going to buy all that off them. Okay, so that being said and done, where we think we're going? I think it's $78. What you have is $78.66 is basically a place that we'll see whether it holds or not. This came off the high with volume. We're just about done this month. This month thus far, you had 408 million on the way down. And if you get more volume in the next couple of days, which today we still had volume, bottom line was that what you're going to see, that'd be a spike off the high with high volume, and what that sets up is a much larger downdraft. If we go, we take a look at BIIB. This is Biogen. This is the largest weighting structure inside the IBB. This was up $1 today after not breaking through its highs. It got to 361 last week, then dove down to 328. Did that with 2.6 million, and today it did 1.2 on the way up. Celgene. And what's neat about this index in itself is that you can get through 5, 6, 7 stocks very quickly. Celgene had come down with 17 million shares. It's up with 3 million today. Amgen, AMGN. What do you have with Amgen? Amgen was flat out here today. Amgen come off the high with 7 million shares and did 1.6 today. You know, what you also have happening, and pay attention to some of these speculations for 2015. You know, all day long on CNBC, all I was hearing that the biotechs were going to, you know, for 5 years in a row, the biotechs have been up. Bottom line, most people think 6 years in a row they're going to be up. You know, we'll see how that shakes out. There's no doubt what you do have, if we go back to that IBB for a second, you will see that the move higher wasn't parabolic, but it was pretty close to it. the move in the IBB, it was close to it, but it wasn't. The move in GILD is parabolic. And what a parabolic move, folks, is that it's an angle that's more than 45 degrees. So if you just take a pencil and you keep it up, once you get an angle that's more than 45 degrees, that's a parabolic move in the marketplace. Parabolic moves in the marketplace, when they turn, and especially if they turn with volume, which most of them do, the way down that elevator is twice as quick as the way up. And you know, we'll see where this whole thing does shake out. But bottom line is that that's how that is set up right now. Let's go over to good old Apple. Apple out here, trading 113.91. You're off the high of this 119. You have the high volume low at 106. And I suspect Apple's going to start making its way back to 103. That's on your daily. We put this on a monthly, and what you're going to see on the monthly is that once it gets back inside, 100 is going to be the number. You get back inside 100, and Apple's got a long way down. You know, Apple has been up here on air since April of 2012. That's the first time it hit 92. It makes it up to 100, does a counter, you know, goes back to 55, so it goes down 45% in 6 months. It takes about a year to crawl all the way back up to that level, and you know, we'll see how this baby shakes out. But I expect you're going to be back under 100, and then Apple's going to have some real problems. What you do have is that the Apple Watch, they're expecting to sell a huge amount of Apple Watches. And it was a great question, Gallagher. That why would you think you're going to sell so many millions of watches just because Apple got into it, when there are plenty of watches out there right now? You know, Samsung is a beautiful watch, folks, okay? But the bottom line is that I just don't know how many people actually even wear watches anymore. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials, they were flat. Dow was down 15. S&P's, NASDAQ were flat. You had United Technologies. United Technologies was down 38. You had Big Blue off 183. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 15, NASDAQ flat, S&Ps were off 2.5. And as we do each and every Monday at 30 past the second hour, we have our man, Mr. Sean Cruz from TD Ameritrade Think or Swim. Folks, every Tuesday, right here at TFNN, Sean is the best option show on the planet. It's broadcast from 12 to 1 Eastern Standard Time. And don't forget, all the programming at TFNN, you can get right on your cell phone. We start live programming every trading day, 8 o'clock in the morning to 6 in the afternoon. We replay that. Go to TFNN.mobi. You can get the audio. If you want to get the charts, the video, as well as the audio, just go to TFNN.com on your cell phone. Hit the top right button, you'll see the Tiger TV. You can get the audio plus the video. Now, if you haven't test drove the Thinkorswim platform yet, folks, great time to try it. Go to TFNN. You'll see the banner on the top and the side. Hit the banner. You can bring up the platform. They will let you trade with paper money. I use it each and every trading day, whether I'm trading options, futures, commodities, or currencies. That's all in one platform. It's an outstanding platform. It's fast. It's furious. And they upgrade that on a continual basis. Sean Cruz, what's going on?
Not much, man. How are you?
I'm doing great. You ready to kick off a nice 2015?
I am. I'm ready. I'm waiting for everyone to come back from vacation and start get some more volume in the market.
I know. Over the weekend, Sean, I was thinking, I said, okay, and it gets really intriguing, folks, when, Christmas is on a Thursday and New Year's is on a Thursday. I was saying, okay, are we going to get in the action Monday and Tuesday? And I almost thought we were. Do you know what I mean? Because I said, well, you know, we've almost had a week off already. You know what I mean? But it looks at it's going to be January 5th, right? I mean, realistically, you know.
It's going to have to be. You know, we got some good things coming out this week. We're going to get a look at some more manufacturing numbers.
Yes.
You know, in that GDP print last week, I didn't see that coming. I thought it would be, you know, a good print, but I didn't see 5%.
That's pretty intense, I know.
Yeah, but some of the data is kind of pointing to a little bit more of a slowdown in the fourth quarter.
Yeah.
And I think so we're going to get PMI numbers this week, ISM, construction spending. So we got a lot coming up this week that I think will kind of give you a little bit more clarity on what to expect for the fourth quarter.
Yeah. And what we do have, okay, is that this Wednesday, folks, okay, bottom line is that, they're either going to sell, hold, and there's a lot of winners out there. It's going to be interesting to see how this shakes out, Sean. You know, do they go in the option market to basically, hold their shares until the first of the year? So I can see, and we'll know pretty quickly. Are they just going to sell out, or or do you wait till the new year and then all of a sudden, we do get some nice volatility in the marketplace?
You will. I think VIX right now, VIX is at 15, which is kind of hovering, kind of that middle range. So it'll be interesting to see if we, break down back to that 12 or 13 range, or if we kind of pop back up into the 20s again. So I think that'll shake out, coming up here in the next week or so.
Yeah. What is intriguing, even, I'm glad you just brought this up, because it's like, for a market that was flat out here today, I guess there was still folks earlier in the day when that thing was at 16 that were just covering positions, at least taking out insurance, right? Because that's kind of unusual when the market really wasn't down.
Yeah, if you see the market finish flat, typically the VIX wouldn't, would kind of maybe muddle it flat, maybe even come down a little bit. So seeing it finish up, a little over 3% to almost 4% actually. That's kind of something, as option traders, when you see that price action, in the indices, and then you see the VIX up like that, it kind of makes you want to take a bigger look in there and see exactly what's going on.
Yeah, no doubt. Now, I'm going to switch gears on you for a second. Are you a Cubs fan, or are you a White Sox fan?
I'm a Sox fan.
Yeah, Sox fan. You get a lot of Sox fans in that office, man. I like that. That's pretty wild. Because I know from Tampa, you got Madden's going to be coming into town, right?
Yeah. So we got some. Who else was Fox? We got Samardzija. So he was with the Cubs, went out of town, and now he's kind of coming back in. But he's going to be pitching for the Sox this year, which I think he'll get a good draw down there. But it's weird because I lived in Wrigleyville for 4 years, so I had to troop down to the other side of town to see the Sox play, but.
So let me ask you something, because I know that both fans are, rabid fans. There's no doubt about it. So how does that work? Is it just work like who your family was with when you were young, growing up, or how does that work?
Yeah, so actually I'm a Sox fan because as a kid I used to carpool to school with the trainer for the White Sox kids.
Oh, I love it. Oh, that's hilarious.
I'm biased in that regard.
Yeah, right.
But yeah, other than that, I think, some people grew up on the north side, so they're going to lean towards the Cubs. Anybody from the south side, a lot of your, Irish guys from the south side are definitely big-time Sox fans.
Yeah, no, that's what I noticed. That's pretty wild, man.
We got the Bears. We got a new coach coming in now.
Yeah.
Some bad days for some of the coaches in the NFL today.
Oh man, insane, right? There's folks. It was a massacre out there. If you hadn't heard it yet. Yeah. No, seriously, man. That happens at the end of every season, folks. But this year, it seems pretty substantial, man. Do you know what I mean?
Definitely. It's probably a good move for Jim Harbaugh, though. I think he's gonna make some good coin out of Michigan.
And listen to this, folks. Okay, this is what Sean's talking about. So Harbaugh, okay, is going back to Michigan, and what's really going on. I was watching this today, Sean. And the basketball tickets, they're figuring, and that's his alma mater too, folks, okay? So there's a basketball game tomorrow night, and on StubHub and the rest of them, the basketball tickets just went to double the price. Isn't that wild? Because the game's tomorrow, and they figure that, I guess the announcement's going to be tomorrow, but they figure he'll be at the basketball game tomorrow night too. Isn't that, yeah, I know, pretty wild.
Damn. Well, listen, you can be there.
Yeah. Oh, listen. It's amazing. It's amazing that college teams, large college teams, can pay as much or more than a pro team, right?
Yeah, that is interesting. But you know what? The NCAA, they make a lot of money on, just even the gate. The tickets they make at these games are enough. But there's a lot of money in the NCAA for the football program. So
and they don't have any expenses because none of those kids are getting paid.
No. Yeah. No. I think they're getting like some book money or something every semester. That's about it.
Yeah, that's going to change, man. I think that's going to change. I think college football, years ago, they're making money, but now that's big dollars, man. No doubt.
Absolutely.
Well, listen, man, you have a great night, safe night. Look forward to a awesome 2015, and of course, we look forward to the show tomorrow at noontime.
Excellent. I'll be there.
Okay, Sean. Have a great one, man. Have a safe one. And that show, folks, 12 to 1 Eastern Standard Time. And what Sean and Thinkorswim, TD Ameritrade are fabulous at, folks, is setting up strategies. The strategies that they set up, meaning whether you're a bull or a bear, it's not just buying a call, buying a put. Bottom line, listen to the program, 12 noon, no matter where you are tomorrow. Our man, Mr. David White, David, folks, is he's on vacation, and he's got a well-earned vacation. He'll be back next week. But what he talks about a lot, not a lot, but he talks about it in the aspect of when announcements are going to be made, and they're bad announcements by companies, okay, they always make them when no one's around, okay, and there's no doubt that's the name of the game, okay, because in a corporate world, they're hoping that the least amount of people are listening. Well, that being said, okay, what is really wild, if you happen to be in New York or New Jersey, what you have out here is that Saturday night, you had Como and Christie simultaneously. They vetoed there was a bill that was going to basically, they were going to lose some power over the Turnpike Authority. And the Turnpike Authority, is like huge. You're talking about a $40 billion budget. Bottom line is that they're claiming that they didn't wait till Saturday night to veto it, but in fact, they both did it at the same time. Now, the reason I bring this up is that you can see one's a Republican, one's a Democrat, and guess what? It doesn't matter, folks, okay? All power is into power, and power absolutely corrupts. And what this bill specifically did do is that there were going to be more checks and balances inside the Turnpike Authority. And as one of our Tigers said, it's a $40 billion honeypot. There's no doubt about it. Hypocrisy, yeah, it's real. And the amazing part, when I was just reading the story, and when it says they both absolutely denied that they did that on a Saturday night, and they did it right before midnight, by the way, okay? So of course everyone's busy. Bottom line, what does it mean? Guess what? Today's newspaper is tomorrow's trash, and they know it, and that newspaper is already out, and whether that story comes across, guess what? The citizens of New York and New Jersey lost, because there's going to be more political honeypot given out to their friends, family, all of the above. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Don't forget, folks, this week we get the Tigers Den. It's open house at the Tigers Den. You can test drive it 30 days, absolutely free. Check it out on the front page of TFNN.com. Dow Industrial's down 15, NASDAQ flat, S&P's off 2.5. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Some of the high-volume stocks in this low-volume market out here today. We go through some of these S&P stocks. This is what you have. Microsoft was down 43. You had Gilead up 351. Facebook was down 75. We had Citigroup up 30. ExxonMobil was down 14. If we go over to that oil sector, we start with ExxonMobil. So oil came down to another level out here today. I expect, we're at this 53.50 right now. 50 is going to be the next stop on this baby. ExxonMobil is off its high of 105, 104.76 to be exact. You're trading at 93.07. And this little baby has that high volume swing low at 86. He's going to go after the 86 level. And we'll see if, in fact, we get an expansion of volume as we go downtown, as we did last week. Exxon itself, it came down hard off this 104. It has just a monster high volume low at $86 right now. This is the week of the 19th of December. We did 132 million shares. Then we go up last week with 49 million. What that sets up is two different things. It sets up first going after that swing low again. But what's also sticking out there is a swing low going all the way back from June of 2012 at a price point of $77. So that's on your weekly. You take this and we put this on a monthly, and what you're going to see on the monthly is that you've been in this consolidation for quite a while. What you also have is this, is that the highs that were generated in 2007, we took those highs out in ExxonMobil in the last month of 2013. Now, we stayed up there, folks, for 8 months with dramatically lighter volume. So check it out. The swing point that we took out, you took out a swing point of 94.74 that had 616 million shares on a monthly. We took that out with 269 million. We took it out December of 2013. You stayed up to those highs until September of this year. Now what do? You're back inside the range. Well, guess what? When you're back inside the range and you have a failure, and it's a failure with lighter volume, and a huge amount of lighter volume, you're talking 269 versus 618. What does that set up? That sets up, you can't bust them up, you're going to bust them down. And the first place on ExxonMobil was $81. So this CVX, if we go to Chevron next, Exxon is the largest weighting structure inside the XLE. If we go to Chevron next, Chevron's the second largest weighting structure. What we have with Chevron, same deal. You come down off 135. You made a low last week of 100, 35 bucks down. You're at 113 right now. We put this and we line this up also on a monthly. The difference is that we're still above the 2008 highs. That's the good thing. The bad thing is that you're coming off the high with volume. So Chevron, you're at 113, 104 is the next stop. I expect Chevron's got to get down to this 83 area. So the oil and gas sector itself has a long way to go down, folks, okay? And let's bring up Schlumberger, actually. So the difference with Schlumberger is that, of course, Schlumberger has a wide range of services, project management, information for the large oil companies. That's trading at $87 right now. The high was 118. Now, Schlumberger, this little baby also failed its high of 2007. It got up to that high, but gave it up immediately in June of this year. You down, you get some juice on the move down, and $78 is the number. As we go through each and every one of these oil and gas equities, what you're going to see is that lower price is not only out there, it looks to me like it's going to be dramatically lower price. If we go to rig, Transocean, this thing's a mess. Transocean is trading at $18.79. Now that's off the high of $163. Transocean continually has gone lower, but with what? With monster volume, folks. Monster volume. We hit a low this month of $15.97, and it looks to me like what you're going to have, I actually got to bring this back more than 25, no, let me see, how many years do I have it on? I think I got to bring this back 25 years to figure out where the heck it wants to go. It's broken everything. Yeah, so this has broken everything. This This equity get out at $10. That's where this is shaking out right now. That's pretty intense. You get your first leg down from 163. It goes from 163 to 41. That's in 2008 when the market crashed. You have a counter trend bounce from 41 and you get up to 90. And if you want to see an equity that came down with volume off the high, goes up and doubles in price, we went from $41 in 08 up to 90 with light volume, and then gets croaked again and just doesn't turn back. We go from 94 and come off that high with volume again. We go to 41. Then it builds cause for a good couple of years. It breaks the 41 and breaks it with volume. There's big problems in the offshore drilling market. So that number there, what their business is all about is large, deep, offshore, that's contracted. That's what they are. And we don't need them. We don't need them because there's so much oil in the shale. There's so much oil. And what also is happening is this. So check this out. Petrobras, right? Now, Petrobras off Brazil. And this is where rig, years ago, I had some juice underneath it because the finding of Petrobras off Brazil was supposed to be not only the biggest find ever, they were going to be drilling forever, all of the above. Well, the bottom line is that what has ended, well, it hasn't ended yet, because what has just happened today to Petrobras, let me see if I can find this. Petrobras, I think, has $540 billion in bonds, and they didn't release their numbers because they have a huge fraud problem going on inside Petrobras itself. And what was supposed to happen is that they had until today. Oh, here it is. I got it. Okay. So Petrobras failure to report earnings violated the bond terms. Under rules governing, they have $53 billion in outstanding debt, and they were supposed to file today. So what you're going to see by tomorrow morning is that there's going to be hedge funds that are going to say that they're in default. And, you know, bottom line is that oil's in trouble. Have a great one. Have a safe one, folks. Look forward to speaking to right here tomorrow. Go get them, folks.